Hello everyone. Uh, I hope everyone is doing good. Today I'm going to share with you some information on a trade that we can take as soon as the market opens. So usually and ideally, all the traders are suggested not to take any trade until an hour from the time the market opens. So on the East Coast and the New York Stock Exchange and all other exchanges open at 9:30 a.m. Eastern time. So ideally, most of us should not take any trade until 10:30 because there is a lot of volatility in the market in the morning. People are buying and selling. Big institutions, they are maybe unloading their positions or holdings. They are doing trades. So although there is a lot of liquidity, there is a chance we might not get the best deal, and it takes time for the stock to stabilize again, right? So now, contradictory to that, I have an idea, SPX trade idea, which we can do in the morning. So irrespective of the timing, and it is better if we do this trading strategy on the SPX in the morning itself, as soon as the market opens, because there are high chances that we will be profitable in the position. And that would be a day trade. It will be a 0-day trade to expiry. So which means that you will close the position on the same day, right? And ideally, if everything works out in our favor, we will close the position in an hour or 2 hours, and we would apply the stop losses and the profit take orders together, right? Now, to let you know what SPX is, SPX is the mother of all the indexes. Uh, Whatever companies, mid cap, small cap, large cap category that we have in the US, this SPX tracks everything, all the companies, right? So it is the mother index for all the companies, all the stocks which are traded in the US, and SPY is the ETF for this index, if we know, right? So we will be taking this trade on SPX. Before we take that trade, and I will show you live, I am again on the Thinkorswim platform, and I like this platform very much for a few reasons. Uh, the most important reason is because it has the on demand feature, which means that you can change the dates. You can go back in history, you can change the dates, change the time, and real time play your trades on that particular historical day. That is the benefit that we have. They keep on upgrading the platform. So I think as of today, it will be 1 day or 2 days back from the date on which we are working. So if it is 10th of October today, the real-time market simulation might not be available for 7th or 8th of October. So it takes time for them to upgrade their environment, right? Now, before we take the trade, I want to show you one option strategy. That is what we'll be taking the trade on, and that is called as the iron butterfly. And what the strategy does is, in that trade we have 4 legs. So when we do that strategy, we sell the at the money call and at the money put, right? And let's say the total price or premium for the calls and puts, in this case 12.2 plus 6.9, it is around $20. So which means that if the at the money calls and puts are trading at these premiums, we sum up both the premiums for the at the money calls and puts, and we arrive at approximately $20. The SPX is supposed to move plus minus 20 points today. That is what it signifies. So it gives you a range within which the index will trade. Now, if we are taking this trade as an iron butterfly, I will sell the call and the puts which are at the money, and then I will go back 20 points below for the puts. So if it is, it would be like 4485 if we subtract 20, and then if we add 20 to that, it will be 4525 on the call side, right? So you need to take that range plus minus 20 and buy the calls and puts which are out of the money. See, that is what we are going to play. The reason we are playing this strategy is because we want the index to be in that range, which is implied by these premiums, the sum of the premiums or the range for the day. And if it happens, then we are going to make money through the time decay of the options, which the ATM options which we have sold. So this 4505 call and 4505 put. We have sold these for today, which is a zero day trade strategy, right? 0 day to expiry strategy. So as long as the index it trades within this range, we are going to capture on the time decay of the premium for these two options which we have sold, which are the ATM options, and we will make money. But now it could be a risky trade as well. So I would suggest we always do a stop loss and the profit taking order together, right? So let me show you quickly. We can get started. So I will replay the market as of 9:30 so that I can demonstrate you live what the trade is and how it works. So I click here on the date and I change the timing to 9:30 and click go. So if you see, it is buffering and the time is now set, right? So in my system, I have already saved the type of order which I want to do. So I am selling, going to right click on the call side or the put side, it doesn't matter, which are at the money. So let's say I go here, sell custom, and then I go to 10 SPY daily. Okay, so this is the trade that I am talking about. So I'm selling 4510 calls and puts which are at the money, and then I'm taking a range of 25 bucks, plus and minus the ATM strike. So it will be 4485 and 4535. That is what I'm buying. So I am doing this 4 as an iron butterfly, and I'm receiving a credit of 1485, while I am also trying to profit here. So as long as I'm receiving this credit and I can capture a minimum of 20 bucks per contract, which is 20 into 10 is 200 at least minimum we can earn if this works in our favor. And then we also have the stop loss order, which is 60 cents higher than the price at which the order will be filled. So let's trigger this now. Let's see where we end at. Okay, so you see this order is filled and we received, if you go to the filled orders, so we received a credit of 15.3 bucks for this contract. So 1530 per contract, and we have 10 contracts, right? If you can see. Now I have already applied the profit taking and the stop loss orders. So the profit taking and the stop loss orders, you can see they are working here. We can probably wait for some time. If you look at the chart, that is where our stop, and that is where we have our limit to take the profit. So we can wait for a few minutes. Let it play. Okay, so so now you see, because I had applied the profit taking order on this trade at 20 cents lesser than the filled price. So 20 times n is 200 is what I got as a profit overall for this trade. So we can do these trades ideally if we repeat the same order with a variance of 25 strikes, right? If we do that order every day, it makes us profit 75% of the times, and 25% of the times we never know where the market goes. But as long as the SPX plays in that range, we can make quick bucks using this strategy. So let me know how you like this trade and the trading strategy. We can apply this in our paper trading account. You can do it in the virtual account on Thinkorswim. And maybe if you want to back test, we can do it for a number of days and see how much profit we are generating. So this is the strategy which I was talking about. Let me know in comments what you think, and please subscribe if you like my channel. Thank you.